Welcome everyone to our webinar on how Trump's new tax law can reduce your taxes by 50% or more. This is Tom Wheelwright. I'm your host and founder and CEO of Wealthability TFW Advisors. So I'm very excited to be with you today. We're going to have a lot of fun today. Believe it or not, we're going to have fun because education should be fun. It should never be boring. And we're going to talk about some great things about how to reduce your taxes. Now, this is an educational webinar. I'm not here to give you tax advice. I'm not your tax advisor. And we're not giving legal advice. So it's purely education. I want to be really clear about that. Remember, if you want to change your tax, you have to change your facts. So it's all dependent on what you do with your facts. By the end of our webinar tonight, you're going to know that the three levers really that would allow you to legally cut your taxes by, should be as much as 30 to 50%, 10 to 40% at a minimum, and lock down assets so that you're protected from what I call the pirates, the predators, and the politicians. And I want to give you a clear path so that you can take 3 days to implement what we're talking about. 3 days, clear path. Now, for those of you who showed up tonight, the first code for the bonus, the 10-year wealth architecture blueprint, is Wealth Map X. Wealth Map X. So claim your bonus right now. Okay, now, here's what most people don't understand about the tax law. The tax law rewards action, not income. Action, not income, right? It actually penalizes income unless you take certain action to change the nature of that income or the action that you take to invest that income. When you align your entities, your incentives, and your formalities, and this is the detail stuff, right? This is the stuff that we tend to forget about, but things like your tax returns and your reporting and your corporate formalities and your documentation. When we align all of those things, entities, incentives, formalities, along with government policy, what the government wants you to do, your taxes drop and your wealth grows. It's actually an equation that really done right should work every time. Your taxes drop, your wealth builds. So the challenge is most of the people that you see on social media, the so-called tax pros, most of the tax preparers, most of the people you're going to talk to for your tax return, if they show you anything, they're probably showing you the really simple stuff, the deductions. And they're never getting into the entire map. The tax law is truly a roadmap for reducing your taxes and building your wealth. And so today, we're going to get into how that map actually works so that you can get an idea of this, and we'll bring in how the map works broadly, but also how it works specifically with regards to the Trump tax law. So for those of you who don't know me, I really appreciate you showing up. And let me give you a little bit of my background. So I grew up in Salt Lake City, Utah. So I was a good Mormon boy. So I spent 2 years as a Mormon missionary in France, Paris, actually, learning how to get rejected in French. And from there, I spent a couple of years at the University of Utah to do my undergraduate degree. And then I went to the University of Texas for my master's of professional accounting and tax degree. From there, I spent 7 years with Ernst & Young, one of the largest CPA firms in the world, including 3 years in their national tax office in Washington, D.C. I actually did that during the Reagan years, so it will date me a little bit, but I will tell you, I've been through massive tax changes before, like this one. After that, I spent 4 years as the in-house tax advisor for a Fortune 1000 company in Phoenix, Arizona. And then I decided, hey, I'm going to start my own CPA firm. I looked around and I saw that there was really good tax advice if you were a Fortune 1000 company. But if you were a small entrepreneur, there was no good tax advice. Nothing was available out there. So I decided, and I love entrepreneurs. I'm the son, grandson, and great-grandson of entrepreneurs. So that was my focus from the very beginning. How do I deliver the best tax information, not the best tax information, but the best tax strategy, the best tax planning to the entrepreneur community, to the business community. And that wasn't getting it otherwise. And so I started my first firm. I grew that firm. I acquired, sold firms. And along the way, I was an adjunct professor at Arizona State University in their Master of Tax program. But I also, in one of my acquisitions, I met a fellow by the name of Robert Kiyosaki, Rich Dad, Poor Dad fame. And Robert and I became friends. And we have, over the last 25 years, we've traveled the world together and taught in 30 countries, 6 continents. And what we've done is we've actually, in doing this, what I've learned is just how important it is to think differently about financial education. Rich Dad, Poor Dad is like the opposite of what you hear in the financial markets. A number of years ago, Robert asked me to write a book. He said, you need to write a book that actually, and I go, you know what? I like what you're teaching, Robert. And I started thinking about it. And I'd done a lot of tax planning for a lot of years now. Now I'm 20 years into this. And I go, you know what? There's too much emphasis on postponing your taxes. There's too much emphasis on the simple stuff. Nobody's taking a really big picture and nobody's actually understanding how the law actually works. And so I wrote a book, Tax Free Wealth, which became an instant bestseller and is still #1 bestseller on Amazon and in bookstores. And the purpose of Tax Free Wealth, to explain this is how the tax law actually works. That the tax law is a map. It's a code. So it's a little secret, but it's a map. And it actually shows you how to reduce your taxes and how to build wealth. Now, what's really interesting is we've had so many big tax law changes in the last few years. 2017, massive tax law changes. Again, first tax bill under Trump. In between 2017 and today, we've had massive tax bills during COVID, since COVID. And now we have the new one big beautiful bill. And what we end up with is we're always wondering what's going on. And what I want to give you today is this is what's going on, and you don't have to worry about it. You can actually understand what's going on. You can understand it. You can figure it out, but you do have to act because things changed in 2025 with the big, beautiful bill. Some of them changed for 2025 and some of them will change at the end of 2025. But you are going to have to understand, particularly if you're a business owner, because business owners have the biggest opportunities to reduce their taxes. Now, the tax law is not just a roadmap. I look at the tax law as a game, and I think it's a pretty fun game. But here's the thing. So the tax law actually has different rules for different people. And I'm going to draw this out. This is from Robert Kiyosaki's second book. First book, Rich Dad, Poor Dad. Second book, Cash Flow Quadrant. And what Robert says is basically we have 4 ways we can make money. We can make it as an employee, small business, a big business, or a professional investor. What I found as I've traveled the world with Robert and learned with Robert is that there are different rules for this side, which is what I'm going to call the consumer side. Then for this side over here, which I'm going to call the producer side. The rules are different. So most people, because most people are under the consumer side, most people actually play by these rules. And at best, they understand those rules. And the tax law actually limits employees and small businesses in what they can do. In fact, generally speaking, you make a good salary, you're going to pay about 40% in tax as an employee, 60% as a small business, but then only 20% as a big business owner, and as little as 0 if you make your money as a professional investor. That's just the way the tax law works. Okay. You can say, well, it's not fair. It doesn't matter. That's the way the tax law works. Now let's look at the producers. Okay. They're paying 0%. And they're getting all the other tax benefits as well. It's not just that they're paying less on the money they earn. They're actually paying, they can pay as little as 0 tax legally. They can. Now, not all of them do, but they can. But here's the cool thing is that most people don't understand that there are different rules over here, and you just have to understand the rules. So if your choice, you can play by the consumer rules or the producer rules. Either way, I suggest you play by the rules to win, because if you're in the game, whether you like it or not, the IRS is your partner, whether you like it or not, you might as well win the game. So I'm going to walk you through 3 secrets, really 3 myths that the rich understand because they have good tax advisors, because they can afford the good tax advisors, that most people don't. And most entrepreneurs never understand this. And I run across this literally every single day of my life. The first myth is that planning is pointless because the tax law is going to change anyway. So yes, the tax law changes. I just said that it changed, right? The tax law does change. However, the fundamentals of the tax law have not changed in 70 years. The real fundamentals of the tax law. See, back in the 1960s, the government started using the tax law as incentives to do what the government wants done. Now, there were incentives before that, don't get me wrong, but the tax law fundamentally changed about 70 years ago, and it's maintained that level of incentives. So incentives, and while the specific incentives change, who they apply to don't. And a lot of the basic rules don't change. I'll give you an example. So there were business credits. One of the very first incentives was the investment tax credit in the 1960s. President Kennedy. Guess what? We still have credits. Now we have research and development credits. The incentives are there. Governments have been rewarding entrepreneurs and investors for 70 years. So the tactics evolve, but the principles, they pretty much stay rock solid. Well, what that means is that you're probably missing some opportunities. I'm going to walk you through some, and I'm going to start with the simple ones because I want you to, while I think they're simple, you don't want to miss them. And the first one is you certainly don't want to miss the deductions that a lot of people miss. And so let's just kind of walk through this quickly. What are the deductions people miss most? I'm going to tell you, the first one is the home office. That is the deduction people miss the most. If you're not taking the home office deduction, you need to reconsider that one. The second one, automobile deductions. Most people don't get their full automobile deduction because they're not taking the home office deduction. See, here's the other thing people don't understand about the tax law is there's not one section that applies all by itself and then another section applies all by itself. These sections go together. They work together. And so, for example, if I take a home office, I get more automobile deductions. Well, nobody ever tells you that. So what I want you to understand is that I'm not telling you what you're missing, but even if you're taking these deductions, you're probably not taking enough of the deductions, as long as you take them legally. Now, I'm not going to suggest you take anything that's not legal, ethical, or moral. Okay. Absolutely. I have to sign my clients' tax returns under penalties of perjury. I'm never going to say something that I believe has any chance of being false. Okay, home office, automobiles. Here's a big one, meals. So yes, they're deductible to 50%. However, a lot of times we miss certain meals. For example, you're an entrepreneur. You go out to dinner with your spouse once a week. You talk about business, because if you're an entrepreneur and you out to dinner with your spouse, you're going to be talking about business. You can make that deductible. A lot of people miss that one. Another one is education. A lot of people think, well, hey, the IRS says that seminars aren't deductible. That doesn't mean continuing education is not deductible. Education can be deductible. Now, this is the other thing. I want you to remember this. Never ask it. Here's what I want you to remember. First of all, if you ask a better question, you get a better answer. Now, anybody who's used AI recently knows that one for sure. But here's a better question. So the typical question I get is, what's deductible? A better question is, how do I make my expenses deductible? Because I don't care what's deductible because I'm not going to buy it. But I'd sure like to know how to make the expenses that I already have. How do I make those deductible? So how do I make it deductible? So a lot of what we're talking about and a lot of what I teach in my classes, a lot of what I teach is about how to make it deductible. Ask a better question. And then, of course, another one is travel. But let's not forget the big one right now. I'm going to give you the two big ones. These are the bonus ones from the big, beautiful bill. And the first one is bonus depreciation. And bonus depreciation it's the big kahuna. What does bonus depreciation mean? Well, first of all, what's depreciation? You buy an asset, you buy something you use in your business. You buy a rental property. You get a deduction for the wear and tear. Now, typically you think, well, I'm going to get a deduction as it wears out. Yes. And that is the general rule. With the big, beautiful bill, a lot of those that you buy, you get it all in the first year. You don't have to wait until it wears out. You get to deduct it now. So bonus depreciation is really, really the big kahuna of this tax bill. And so remember that you want to make sure you're taking that. The other one that a lot of business owners miss, and I don't understand how you miss it, it's the qualified business income deduction, or we also refer to it by the code section, the 199A deduction. Now, this is 20% of your net income, 20%. Now, a lot of times it's, again, the question is, how do I get that deduction? Because some of you are probably missing out. In fact, I would say a lot of you are missing out on getting the full amount of the deduction. Why? Because there are rules and limitations. Of course there are. That's how the tax law works. That's the game. Those are the rules of the game. You have to understand the rules of the game if you're going to win the game. And winning the game means paying less tax legally. That's winning the game, so that you have more money to invest at lower tax rates. Okay, so it all works together. So that is basically the first secret, that, you know what, there are the planning doesn't make any sense. See, I can plan for this, right? I can plan for my home office. I can plan to deduct my automobile. I can plan for bonus depreciation. I can plan for my qualified business income deduction. It's not just a matter of doing it when I do the tax return, or your tax preparer does it when you do your tax return. It's, can I plan for it? Can I project out? Okay, wait a minute. This is what I'm planning to do. These are the expenses I'm planning to have. How do I make them deductible? Or let's look at not just the deductions, but how do I have my income tax at 20% instead of 40% or 60%? We're going to talk about that in just a minute. Okay, now, secret number 2. This is another myth. People think, well, you know what? This only works if you're already rich and you're big. And the reality is, I would tell you 30 years ago, 35 years ago, when I started my first CPA firm, I think that was probably true, that nobody actually understood it. And Tax Free Wealth was the first book that came out and really exposed that you don't have to be big. Okay, you really don't. It's not about size. So let's go back to Robert's cash flow quadrant. And, I was explaining that the small business owner, they do tend, let's just say it, they get hosed. Okay, they're that 60%. So let's look at it this way. They're 60% and these guys are 20%. Where would you rather be? Well, wouldn't it be great if you can get here? Well, big business is big, right? 500 employees, more, 1,000 employees. But here's the great thing about the tax law in the US. We have under the Constitution what's called the Equal Protection Clause. What that means is that two people doing the same thing, the same way, get the same result under the law, or should. And under the tax law, they do. So that means that you don't have to be big. You can be small. So a small business owner, can they get the tax advantages of the big business owner? And I will tell you 100%, yes. 100%. Now, will they? No, they won't always. Why not? Well, not just because of ignorance, but also because they're not willing to change their tax to change their facts. You have to be willing to change your tax to change your facts. But here's what I love. So while these guys up here pay 40%, I'm going to tell you right now, if you're an employee and you don't have a business and you're not investing and you're not becoming a serious investor, there's not a lot you can do. There's just not. What I do applies to entrepreneurs and investors. That's what it applies to. And I'm not talking about mutual fund investors. Okay. I'm talking about real estate investors, oil and gas investors, energy investors. I'm talking about those kind of investors. But let's focus on these guys. Okay. I got the 60% tax rate and I can actually take this down to 20% simply by understanding the rules and applying them. So let me give you an example. Okay. So the first thing we have to look at, and this is the first thing we look at when I teach this, is we always look at what we call entities. Now, entities, I'll put the word up so you can see it. Entities are, how do we own our assets? That's an entity. So an entity, for example, you may have heard of an LLC, limited liability company, or you may have heard of a corporation, or a limited partnership, or a trust. Okay. Now, how you own your business and your assets has a huge impact on how much tax you pay. How you own your business and your assets has a huge impact on how much tax you pay. See, the challenge is for most small business owners is that, so they're in the S quadrant here, right? The S quadrant, what they tend to do is they tend to be a sole proprietorship. Sole. I have a friend, he says, SOL stands for someday you'll lose everything. Lose everything. And I appreciate him sharing this with everybody. But sole proprietorship, I got to tell you, it's a bad idea. It's a bad idea. You can't protect your assets and you can't protect your tax. So what do the bigger companies do? Well, typically they're going to be so that the B quadrant, they tend to be what we call a C corporation. Okay, but you go, but I don't want to be a sole proprietor and I don't want to be a C corporation. So what do I do? Okay, now we actually have to structure your business. This is the very first thing to go through with people. We have to structure your business. We may be a C corp. The challenge with C corps is they get taxed twice, once when they earn the money and once when they pay it out. Now, big corporations like Apple, they just don't pay anything out. So they're only paying one tax and they're paying a lower percentage. But what if you want to take the money out? You have other things to do with it. You're in the middle. Okay. You're in a bad place there, rock and a hard spot. So what do? Well, it's easy. We do the planning that it takes. And typically what we're looking at, things like, okay, so here you are, you're the taxpayer, you own your business. I'm not going to be a sole proprietor. I'm not going to be a corporation either. I can be an LLC, but if I'm an LLC and I'm still taxed as a sole proprietor, because an LLC with one owner is taxed sole proprietor, what's going to happen is I'm going to pay a bunch of extra tax. This is still the 60% tax rate. So what am I going to do? Well, I'm going to do a little planning. And the first thing I'm going to do is I'm going to make this an S corporation. Now, here's a cool thing. S corporations get the qualified business income deduction, and it makes it really simple. And we can reduce your Social Security taxes by being an S corporation. You don't pay all those big taxes. You're not at 60%. What if we have other businesses? Well, then we can actually set up more. So basically what we're doing is we're using all of the different entities. We may use a C corporation for you. We may use an S corporation. You're definitely going to use an LLC, because I'm going to talk about asset protection in just a minute, but LLCs are great asset protection, according to every asset protection attorney I know. Okay. So we're going to do this when it makes sense. But remember, you got to change your tax, change your facts. So it doesn't always make sense. There are no good entities. There are no bad entities. There are only good entities in certain situations, and they're bad in other situations. So let's talk about a little benefits that we get out of having this kind of a structure. We can actually shift some income. So we have what's called tax brackets. And it's a marginal tax bracket system that we have. And we have these tax brackets. So they start at 0, then they go to 10%, then they go to 12%, and they go all the way up to 37%. And the way it works is the last dollar you earn is taxed at your highest rate, whatever that rate is. You could be, your top rate might be 35%, might be 32%, might be 22%, 24%. Whatever that top rate is, that last dollar you earn is taxed there. Now, the first dollar you deduct is also deducted there, so don't forget that. But why is that important? Well, because we also have what's called, and in the big, beautiful bill, we got a new, beautiful thing called a standard deduction, and we got that standard deduction increased. The standard deduction. The standard deduction is now $15,000 per person. You go, okay, great, but I itemize my deductions, so that's no big deal. Wait a minute, though. That means that the first $15,000, the tax is 0%. This is the 0% bracket right here. That's the 0% bracket, that $15,000. Well, I don't know. Do you have anybody around you that's not making any income, like children? So what if you actually paid your children? What if you paid them to work in your business? Now, I will tell you, I grew up working in my dad's business. My dad was a printer, and we all worked in the business. My brother worked in the press room, and my sister worked in the art department, and I worked, surprisingly, in the bookkeeping in the accounting department, right? So we all worked. Well, the government actually wants you to do this. They actually reward you for employing your kids. They want you to teach your kids how to work. They want your kids to learn about your business. So This is something that I will tell you, I'm always shocked by people that don't know this. I was in South Africa with Robert a number of years ago, and I had with me on stage a tax professional from South Africa, and she's very smart woman. And I proposed paying your kids for working in the business. And I turned to her and I said, would that work in South Africa? And she looked at me, she goes, yes. She'd never thought of it. And I'm not criticizing her for that. It's just not something you typically think of. Well, could I employ my children? Now, do they actually have to work? Yes. Do you have to pay them a reasonable salary? Yes. But when I teach this stuff, I always walk through the details. The devil's in the details. You have to know the details. But think about if you were in a 33% bracket, I can do this math, and you paid $15,000, what would that tax benefit be to you? $5,000 by paying $15,000, because you're getting a deduction. Remember, at your highest rate, 33%, you get a deduction, the highest rate, and they're picking up at their lowest rate, which is 0%. This is basics in my mind, but there's so much we can do. I can just touch on the very simple stuff here, but I'm going to show you how in 3 days we can actually get into a lot of the grit of this. Now, here's the third. Here's the third secret. This is the myth that, hey, it can't work for me. My situation's different. And by the way, audits scare the daylights out of me. I'm going, okay, so first of all, the IRS is not your friend. That is true. They are not your friend. However, the more detailed you get, this is where a good tax preparer, a good bookkeeper, this is where really understanding how things work, the more detailed you get in your documentation, the less risk you have. Risk is a function of documentation. So, do you have your operating agreements for your limited liability company? Do you have annual minutes? Do you have an accountable plan for your business? Do you have substantiation, documentation for the meals that you're going to with your spouse? Do you have documentation for your automobile mileage? Do you have documentation? Let's say you're investing in real estate as a real estate professional. Do you have documentation? Documentation is critical, but it's not just critical for taxes. So it will protect you from an audit if you're audited. It will absolutely protect you. But this is where we get into asset protection. Now, again, not an attorney, but I will give you the education that I've learned over the years on asset protection. The entities that work for tax also work for asset protection. That is a cool thing. The documentation that you need for tax also works for asset protection. Now, what does asset protection mean? It means, hey, I need to protect what I've made because somebody else wants it. It's typically an attorney, right? Working for another for one of their clients. That's typically who wants it. Now, I can protect you as a tax advisor from the politicians, but the pirates and the predators, that's where a good asset protection attorney comes into account. That's where actually getting things set up ahead of time. You cannot wait until after you've had an accident, put on your seatbelt. So you must get this asset protection done. Well, what asset protection includes all the entities and everything, but how do I make sure that those entities actually work for me? How do I make sure that actually, well, those are the details. Those are things like the operating agreements, the annual minutes. Those are all of those details that we're going to do in order to protect first all of our important safe assets. So I'm going to look at it this way. We have actually two types of assets. We have our safe assets. These are assets that we want to protect from everything. We want to protect from our kids. We want to protect from an accident. We want to protect those safe assets. Those are safe assets. And then we have our risky assets, which includes our business, right? We also have risky assets, which includes things like our business, our real estate, right? Our rentals. These are risky assets. So we have to do two things. We want to protect our safe assets, like our cash and our house, right? And our intellectual property, right? Things that aren't going to cause us to get in lawsuits. We want to protect them, but we also want to protect these assets from our business, because we can get sued in our business. We don't want our business, somebody to sue our business and come after our safe assets, our personal assets. So what we have to do is we have to structure the asset protection so that we protect all of our safe assets. Not only are we doing our best to protect our business and our real estate, our risky assets, but we're also protecting our safe assets from our business and our real estate. All right, now we've gone through a whole lot of stuff here tonight. What I love doing most is helping entrepreneurs and investors seriously reduce their taxes and protect their assets. And we can do this in 3 days. We can absolutely do it in 3 days. I know, because what I'm going to tell you about, I did every month, 3 days for 10 years. So I absolutely can tell you that, yes, this does work. Okay. So here's what we do. My good friend, the best asset protection attorney in the world, in my opinion, Doug Laudmal, and I spend 3 days in a tax and asset protection boot camp. Now, we already have it all set up. Again, I haven't done this since the last time I did this was 2014. Doug and I are going to do this November 10th and 11th and 12th in Tempe, Arizona. That's just outside of Phoenix. It's like a short ride from the airport in Phoenix. And this is for business owners and investors, true business owners, true investors. It's for those of you who put yourself on the line every single day and take those risks. You're the people that the tax law can benefit the most, and you're the people that I frankly care about the most. So here's what happens. If you've got some taxable income, you've got some serious tax, okay? So you're not making $50,000 a year, all right? But you've actually got some tax. You'd like to reduce those taxes, and you'd like to protect your assets. You want to make sure that as you grow your assets, that they're protected. Here's what we do. We take 3 days, 3 days live. It's live. Doug and I teach for 3 days together. Now, Doug and I have taught together for many years. And I can tell you, Doug Laudmal is one of the best legal educators I've ever seen. And I've seen a lot of them. And he is spectacular. And he's also a spectacular entrepreneur, by the way. So the first thing we're going to do, so this is our tax and asset protection boot camp. And the very first thing we're going to do is we're going to do 3 days live with you. This means that you've got us, right? And 3 days live, easily a $7,500 value. I got to tell you, I charge way more than that for 3 days of work one-on-one. So 3 days live, and we'll give it an easy $7,500 value. Next, a personalized tax cut game plan. That's what's going to happen while you're with us for 3 days. You're going to come up with this. You're going to get this game plan. Okay. Now, coming up with a game plan. Now it's not going to be a game plan that takes you 6 months to do. Okay. But a 3 day game plan that you can actually use and implement, that's a $5,000 value. Then we have our wealth protection blueprint. So I'm going to call it the wealth protection blueprint. And this includes all of the discussion about the entities, when we use a trust, the corporate formalities, all those details that you need to know. We want to give you that stuff. Okay. So we're going to actually do the wealth protection. So we got the tax protection, the tax cut, the wealth protection, easily another $5,000. You would spend $5,000 with an attorney for a few hours working with them one-on-one. Next, we've got tools and templates, plug and play. We'll call it plug and play. We've got plug and play templates that you can use. Okay, things like your annual minutes, accountable plans, how you deduct, the deduction planners, right? How you deduct things. All right. So that is another $2,500 value. That plug and play stuff makes it so easy. It makes it so easy. And that's the goal, is to make it easy. Finally, you got Q&A. I'm putting that Q&A, that's a big one. And not every day, but throughout the day, we take questions. That's way more than $2,000 value, but I'm going to give that $2,000 value. So the total here, this is easily a $22,000 value. Only for those people to do it today. The cost is not $22,000, it's $2,497. It's $2,497, $2,497. Now, there's a payment plan available. We do have some bonuses for you. First of all, we've got a tax and asset protection workbook, which includes some workflows, checklists, calculators. We'll give that to you at check-in. We've got an entity and formalities kit. We actually will give you templates for your entities and how those entities should work. And then if you do this now, and this is a big deal to me, if you bring your spouse comes free. Now, only your spouse, not your business partner, not your controller, not your CPA, your spouse. Why are we doing that? Because it's critical that I think it's critical, but it is so helpful if you're both on the same page and you both understand it and you can help each other understand it. I find that the spouses who play together stay together. And I'm talking about we're playing the tax game together. So here's the thing. Where we're holding it is in our training center, my own training center. It is capped at 50 seats. It's capped at 50. That's all we've got. We have no more. Okay. Now we've got some bonuses that you'll get. That's just for you guys on the webinar. Remember, the laws are going to change. So you've got to understand them now. There's things to do between now and the end of the year. So head to the TAP page now, pick your seat, choose one pay. I suggest you pay it all at once, or a payment plan. And we will ship you your pre-work this week. And we'll keep teaching you while you register. So just a few things about this. I get questions about it. So I'm going to handle a couple of these questions right away. First of all, I have a CPA. I'm going, great. I will tell you that I'm glad you have a CPA. What you can do is you can actually take this information, take the blueprint you come up with, okay, and give it to them and say, hey, help me implement this. Okay. Second of all, but wow, I'm going to travel all the way to Phoenix, Arizona. It's 3 days. I'm going, listen, 3 days or a lifetime. Most people will spend 20 years of their life paying the government. No, literally, out of your work, just your work life, the amount you pay your government is roughly 13 years. The amount of time you spend just working for the government. 3 days, 13 years. So why not just come? Just come. We will have so much fun. My whole goal in life, make taxes fun, easy, and understandable. We're going to have fun. Now, wait a minute. There's a lot of audit risk. I actually remember somebody saying once, God, this guy's aggressive. I'm going, no, nothing we do is aggressive. I'm going to tell you right now, we've documented everything. We know that this works. I've handled multiple audits before the IRS. I know what works, what doesn't work. It's an advantage of being old. I do know what works. Entities, corporations, trusts, they kind of scare me. Well, we're gonna make it so they don't. We're gonna make it simple for you. When to use them, when not to use them. And then, hey, what, $24.97? Wow, that's a price. It is. It's a commitment. We want you to be committed because I don't want you to just take the course. I want you to implement what you learn. I absolutely want you to implement what you learn. And here's the thing. What you learn will save you enough money to more than pay for your course. In fact, I will guarantee it. If what you learn the very first day does not pay for the course, that's assuming you change your facts to change your tax, right? You actually have to do it. But if it does not, at the end of the day, we'll let you go and we'll send you home with a full refund. So I don't want anybody who's not committed. This is a commitment. Look, the bonuses expire at the end of the webinar. And this is a chance. I think this is a chance of a lifetime. I love this class. I've not taught it in 10 years. This is an opportunity to do something for yourself and your family. And so please join us. If you're a serious entrepreneur, a serious investor, you really want to learn how to reduce your taxes. I so appreciate you being on this webinar. We're going to open this up for some questions. So that we can answer a few questions now. And then of course, we've got our VIP question answer in a little bit. So let's go ahead and open this up for questions, shall we? Are you ready to open this up for questions? Well, while we're doing that, let me go over a couple of questions that I get a lot. Okay, so let's start with this. Let me talk about what some of the things that we tend to talk about at the TAP bootcamp. You know, like I've got an LLC. In fact, I'll ask people, how's your entity tax? They'll say, I can tax as an LLC. Well, there's no taxation of an LLC. An LLC can be an S corporation, a C corporation, a partnership, a sole proprietorship. Okay, so that's what we're going to talk about is how do we actually do this? How does an LLC work? And how do we actually make it be an S corporation or C corporation? Do I need that? Do I need multiple companies? There are a lot of people out there saying, hey, you need, 15 different entities. You probably don't. I'm going to tell you right now, you probably don't. You don't want to build something you're not going to use. Another question. We always talk about paying the kids because that is one that people love. Can I do that? Yes, you can. How do I do it? We're going to walk you through that. What about the big write-offs that people talk about at the end of the year? Equipment write-offs, big vehicles. Does that still apply? The rules have changed. The rules have changed on the vehicle write-offs. Okay. So yes, they apply, but there are restrictions now on, you go buy a big pickup truck or you buy a big SUV. There are restrictions. So we'll talk about those. Okay. We'll talk about qualified business income deduction. We'll talk about the home office. This is like something that is a bit of it annoys me, because I hear people all the time saying, my tax preparer told me not to take home office deduction because it will cause a red flag. And yet those same preparers have put you in a Schedule C, which is a way bigger red flag. By the way, biggest red flag on your tax return is a Schedule C, meaning you're a sole proprietor. So instead, instead of being a sole proprietor, why not get your entity set up properly? And if you do set it up properly, we can eliminate the red flag for the home office deduction. That home office deduction, it can be thousands and thousands of dollars. Why are you leaving that on the table? Okay, so I'm going to go ahead and have our producers get on, and we've got a studio chat here. All right. And let's talk. Let's talk with everybody in the studio here. Let's see. Let me take this off. And all right, here we go. I'm getting some of these questions here. All right, I'm looking to start a business in the near future, using this time to educate myself. Very informative. I treat Tax-Free Wealth Book like a textbook. Thank you. Great information. Really appreciate that. So I would encourage you, if you're looking to start a business, really, this is the TAP Bootcamp is probably a really good spot for you, because here's the difficult thing. You can fix a problem. It's so much easier not to have the problem in the first place. And so when we work through over those 3 days how to set up your business properly, now you're never going to have the problem. I always have somebody, by the way, that has a major problem with one of their entities at the TAP class. So I love Captain X fired his old CPA. They always do. And sometimes they're really hard to deal with. We'll figure that out, but we'll answer their questions, right? You'll have us. I mean, it's a small group. 50 people is a small group. We actually built this. We actually hold this to 50 on purpose. I find that more than 50 is too many. I can't address everybody. And too many less than 50. And 50 is 40 to 50 is exactly the right number. So, so here's a question. How's the big, beautiful bill changing the real estate investor as a landlord in California? Well, I've got to tell you, if you're a real estate investor as a landlord in California, I'm sorry. California's tough, right? Now, from a tax standpoint, here's the cool thing. From a tax standpoint, the federal taxes, we still get all the same federal tax benefits. So we still get the bonus depreciation. We still do a cost segregation. For the California tax, they have their own rules, okay? But what we will get some benefit. We'll just get most of the benefit on the federal return. All right, now Juan says, Tom, I have a business in an LC, but don't know what entity I'm in. Okay, we can address that. In fact, I'll tell you what, I'll make you a deal. If you bring your tax returns with you, then we can actually have some, we can, if I need to look at this, I can look at it and tell you, hey, here's how it's taxed, because I can tell by the type of tax return you're filing. So I love it when people bring their personal information. Now, I'm not expecting you to share your personal information with everybody. I'm just saying that if you bring your personal information, it may be an opportunity for you. Okay, it may be an opportunity for you to do some things that we can help you. Now, again, we're there as educators, right? For me to be your tax advisor, we have to have, by law, we have to have an agreement. Same with Doug. But I'll tell you, we're pretty generous educators. So we will walk you through why and how. And here's the other thing. So here's a great thing about the TAP Bootcamp. The great thing is you're going to have 49, 48 other people in the room that ask really good questions. And so you'll get questions answered you didn't even know you had. And I find that every time that I teach. This is why we actually built this facility. We built this facility just for our classes like this. This is one of my favorite classes. Again, November 10th, 11th, and 12th. And the first time we've done it in 10 years, 11 years. So very excited to have it. It's going to be limited. So be sure to register. Thanks again for the heads up. Is there a payment plan available? And the answer is yes, there is a payment plan available. So if you want to go to the payment plan, go ahead, just look below and you go, wealthability.com/tap. There you go. That's where you sign up. But please, I got to tell you, I mean, I did this for a long time, right? And that's why we brought it back, because I love this class. It has helped more people so much. And I have no problem pushing it hard. I think you should be there. If you're paying more tax than you want to pay, you should come to the TAP class. So just go ahead and register. You have questions. I'm going to move over in a couple of minutes to the VIP room. One of the questions we have is, I need to check my PTO availability. Okay. So go here, check the website. This is an offer today. And unfortunately, here's what I would do. I would sign up. Okay. Sign up. And if something happens tomorrow, okay, you check your PTO, we'll take care of you. Okay. We'll take care of you. But sign up today, because I think it's going to be full. I think that's your issue. Your bigger issue is it's going to be full. So it's not, can I wait? It's I think it's going to be full. We literally only have capacity for 50. And so it's not like I can just say, hey, well, we'll go to 60. I literally don't have the space for it. So I would just do it. Just do it. We'll make sure you're okay. Okay. But yes, check your PTO, because it'll be worth it to you. Absolutely worth it to you. Here's an interesting question. Does your CPA firm offer internships? We'll talk. You can get some information to me. We actually have a franchise of CPA firms, and we have a TFW Advisors franchise. And so, one of the things that people do ask is, well, what if I needed a new CPA? We can help you with that. That's not the point of the class. The point of the class is to get you educated, get you on your feet, get you with a plan, get you moving. And I love that we've got a student here that's looking for an internship. I do. I love that. Abdul, I love that you're on here learning, and I love everybody that you're on here learning. And thank you so much. I know how valuable your time is. It is, there's no amount of money we can't recover. We can always make more money. We can never get more time. So I recognize that the 3 days is a bigger commitment than the $24.97. Now, good question from Lorena. Lorena, is there a money back guarantee? And the answer is yes. Okay. If you do not get the tax savings equal to your money in the very first day, we'll just give you your money back and you'll be on your way. Okay. Absolutely money back guarantee. Very first day, you don't have to be there all 3 days. Okay. I'm not going to hold you for 3 days to wait to get that value. You'll get it the first day. And I don't have any problem with that, because it happens every time. We've actually done this guarantee before. It's never an issue. So, the private Zoom Q&A for the VIP is coming to you. Okay. So a couple of questions on that. It's coming right now. So just hang on for a second. I'm going to log off now from this and move to the VIP Zoom. It's a VIP Zoom right now, and I'll see y'all later. Thank you so much. Look forward to seeing you at the TAP class.